Hello everyone. Welcome back to Your Money Your Way. Today, we're diving deep into the financial health and future of a key player in Singapore's transportation network, SBS Transit. Whether you're a commuter, an investor, or just curious about the Lion City's infrastructure, this video will give you a comprehensive look at where SBS Transit stands today and where it's headed. Please note that the content presented in this video is for informational purposes only and does not constitute investment advice. We strongly recommend that you seek proper guidance from a qualified financial advisor before making any investment decisions. SBS Transit is the backbone of Singapore's public transport, operating a massive network of buses and trains. Let's break down what they do. Their main business is public transport services, which includes two major parts. Bus operations. SBS Transit runs a huge fleet, covering 196 bus routes and holding a majority share of the market here in 2024. They've got a mix of contracts, some through competitive bidding and others negotiated directly. This strong position gives them a solid base for their earnings. Rail operations. They also operate key train lines, including the North East Line, Downtown Line, and the Sengkang Punggol LRT. Following the opening of the Punggol Coast Station, their network now stretches over 84 kilometers. And get this, in 2024, they saw a nearly 4% jump in rail passengers, hitting almost 445 million rides. This shows a strong recovery in public transport demand. But that's not all. SBS Transit also has other commercial services like advertising through Move Media and renting out commercial spaces in their transport hubs. With a very high occupancy rate of 98% for these spaces, it's a nice extra stream of income for the company. Now, let's talk numbers. How's SBS Transit doing financially? Revenue. The good news is their revenue keeps growing. In 2024, they brought in $1.56 billion, a 2.1% increase from the year before. This growth was also seen in the first half of 2024, mainly thanks to more rail passengers, higher fares, and those annual bus service fee adjustments. However, they do expect a dip in bus revenue down the line because of the Jurong West bus package expiring. So, future growth will likely depend more on their rail operations. Profitability. This is where it gets a bit more complex. While their revenue is up, their operating profit actually saw a slight decrease in 2024. Operating costs rose by 2.5%, mainly due to higher expenses for things like manpower, maintenance, and increased rail license charges. They did manage to offset some of this with productivity savings and lower fuel costs. Interestingly, their net profit actually increased slightly by 1.8%, partly due to a fall in tax expenses. So, while they're making money, keeping those operating costs in check will be key. Dividends. Here's something that might interest investors. SBS Transit significantly increased their total dividend per share in 2024 to 28.68 cents, compared to just 11.16 cents in 2023. This big jump was partly due to a special dividend from selling their Soon Lee bus depot. Their policy is to pay out at least half of their profits as dividends, showing a commitment to returning value to shareholders. Keep an eye out though. The ex-dividend date for the next payout is 2nd May 2025. Looking at their overall financial health, they have a strong cash balance of nearly $385 million. Their net asset value per share has also been on the rise. However, while they have positive free cash flow, some analysis suggests that their high dividend payout might be stretching those cash flows a bit. This is something to keep an eye on for the long term. What does the future hold for SBS Transit? Expansion plans. Big things are happening in their rail sector. They won the contract for the Jurong Region Line (JRL) in a joint venture. This will significantly expand their rail network starting in 2027. The Downtown Line is also getting extensions, with new stations planned to open in the coming years. They're even waiting to hear about the tender for the Cross Island Line, which could be another huge opportunity. Operational efficiency. They're working hard to improve how they operate. With a tight labor market for bus captains, they've boosted salaries and sign-on bonuses. They're also focused on rail reliability, with the downtown line achieving impressive reliability scores. Sustainability. SBS Transit is also going green. Almost 90% of their bus fleet now meets high emission standards, and they're increasing their use of cleaner energy buses. They're also working to reduce their energy and water consumption. Regulatory changes. Recently, they've come under greater regulatory scrutiny with the new Transport Sector Critical Firms Act. This gives the government more oversight over essential transport services. SBS Transit says they already work closely with authorities and will comply with the new rules. Let's catch up on some recent headlines. They've introduced several new bus services to improve connectivity in various areas. Besides winning the JRL contract, they've also retained the Celitar bus package. They're embracing technology, partnering with IBM to use AI for rail maintenance and trialing safety tech on their buses. Even their bus captains and station staff have new uniforms, the first refresh in over a decade. New MRT stations on the downtown and northeast lines have also recently opened. What do the experts think? Analyst sentiment seems cautiously optimistic. The consensus target price from one source suggests potential upside. Market perception appears positive, with some platforms classifying the stock as a super stock. The stock price has also shown good momentum recently. Of course, it's not all smooth sailing. SBS Transit faces challenges like rising operating costs, competition in bus tenders, a tight labor market, and the need to manage costs in their rail operations. The sustainability of their high dividend payout is also something to watch. That's our deep dive into SBS Transit. What are your thoughts? Let us know in the comments below. If you found this video informative, please like and subscribe for more in-depth analysis. Thanks for watching.